Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Tuesday, July 25th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's get to that. Tonight we're going on a global tour, diving into stories from Russia to the UK, from the state of Wyoming to the United Arab Emirates, even making a stop in the European Union. We'll start in Russia, where Putin has signed the digital ruble bill into law, giving rise to a new central bank digital currency. But is this a move toward financial freedom or tighter governmental control? Then we'll head over to the UK, where Worldcoin, the project led by OpenAI CEO Sam Altman, is under the watchful eye of the Information Commission's office. In the US, Wyoming is making moves to launch its own stablecoin, but what does that mean for the rest of the country? In the Middle East, we'll look at Rain, a cryptocurrency firm that has just been granted a significant license in the UAE. Back in Europe, we'll discuss the draft rules by the European Banking Authority that could heavily impact stablecoin issuers. And finally, we'll hear from Timothy Massad, the former chairman of the US Commodity Futures Trading Commission, about his views on stablecoins. So buckle up and get ready for a jam-packed episode full of insights and analyses from across the globe. Russian President Vladimir Putin has officially signed the digital ruble bill into law, paving the way for the country's central bank to issue its own digital currency. This move comes after a long period of consideration by the Bank of Russia, and the digital ruble will now be used for payments alongside other methods. The central bank will manage the digital ruble accounts as stated in the new amendments to Russia's civil code. The bill had its final hearing on January 11th and was awaiting the president's signature. The digital ruble is a central bank digital currency project that the Bank of Russia has been working on since 2020. The bank published its first analytical report on the topic and later updated it with feedback from Russian banks and other financial market participants. The regulator began piloting the system with several Russian banks in February 2022, just before the country started a war in Ukraine, which is kind of interesting timing, I would say. I say that because with Russia facing heavy sanctions from the US and Europe, the digital ruble could potentially serve as a means to circumnavigate the massive financial restrictions imposed on the country by the West. Initially, the Bank of Russia viewed the project as both a tool against sanctions and a way to control government spending on social projects. Anatoly Askakov is the head of the Parliament's Committee on Financial Markets. He suggested that the digital ruble could also allow for controlling and limiting the ways private citizens spend them. For instance, parents could control how their kids spend pocket money. Well, it's clear that the Russian government is making a strategic move here. By introducing a CBDC, they're trying to maintain control over the financial system while also leveraging the benefits of digital currency. But let's not forget, this is a government-controlled digital currency, not a decentralized one like Bitcoin or Ethereum. And while it is a step towards digitalization, it is not exactly a step towards the financial freedom and privacy that we value. It's a reminder that while we are pushing for decentralization and freedom from governmental control, governments are pushing back, trying to maintain their grip on the financial system. And that's something we should all be wary of. All right, folks, before we move on, let's pause for a second. If you're enjoying our content, do us a favor and hit the like button. Your support motivates me to continue bringing you the latest in crypto news analysis. Now, let's shift gears and cross the continent over to the UK, where Worldcoin, a project led by OpenAI CEO Sam Altman, has recently come under the scrutiny of the UK's Information Commission's office. Here's what you need to know. Worldcoin is a project that's been making waves in the crypto community. This project, led by OpenAI CEO Sam Altman, has recently come under the scrutiny of the UK's Information Commission's office. The ICO has expressed its intention to examine Worldcoin, particularly its data processing practices. The ICO spokesperson emphasized that organizations need a clear, lawful basis to process personal data and that consent must be freely given and capable of being withdrawn without detriment. Worldcoin launched on Monday. It's a unique concept in the crypto space. It describes itself as a digital passport that can help holders prove they're human. The project already boasts 2 million users from its beta launch. The Worldcoin Foundation stated that it adheres to strict privacy guidelines. It's continuously assessing local laws and regulations to ensure compliance. They claim to be fully compliant with all laws and regulations governing biometric data collection and data transfer, including Europe's General Data Protection Regulation. Now, looking at this closely, it would seem the ICO's interest in Worldcoin is a clear indication of the increased regulatory scrutiny that crypto projects are facing. This is especially true for projects like Worldcoin that involve personal data. The ICO's emphasis on the need for a clear, lawful basis for data processing and the ability for consent to be withdrawn is a reminder of the importance of privacy and data protection in the crypto space. Worldcoin's concept of a digital passport that proves human identity is innovative, but it also raises questions about privacy and data security. The project's claim of having 2 million users from its beta launch shows its potential, but also increases the scale of any potential data protection issues. From one perspective, Worldcoin represents the innovative and disruptive potential of blockchain technology. However, it also highlights the challenges that such projects face in terms of data protection and regulatory compliance. The ICO scrutiny of Worldcoin is a reminder that while the crypto space offers exciting possibilities, it also needs to operate within the boundaries of laws and regulations. This is especially important when personal data is involved. Of course, we should welcome innovation, but also demand that projects like Worldcoin uphold the highest standards of data protection and privacy. Before we move on to our next story, let's take a quick break to remind you to turn on notifications for our channel. It is the best way to ensure you never miss out on our nightly analyses. Our next segment takes us to the state of Wyoming. Known to be crypto-friendly, the cowboy state is now taking a significant step toward launching its own stablecoin. Let's unpack. And now for the latest from the crypto frontier. The state of Wyoming is taking a significant steps towards launching its own stablecoin. The Wyoming Stablecoin Token Commission posted a job opening for an executive director to spearhead this ambitious project. The executive director will be tasked with implementing a comprehensive plan for the stable token, which includes regulatory analysis, accounting, and marketing. The commission was established in March. It has a mandate to issue stable tokens redeemable for $1. The funds raised from this issuance of these tokens will be placed into a trust account and invested exclusively in U.S. Treasury bills. This is a clear move by the state to create a stable and secure digital asset backed by the full faith and credit of the U.S. government. The executive director role is a high-profile position with a salary of $150,000 and the opportunity to work in either Cheyenne or Laramie. The job posting specifically calls for candidates with existing connections and expertise in the blockchain industry, as well as familiarity with Wyoming's legislative processes and key stakeholders. This move by Wyoming is a clear indication of the state's commitment to embracing blockchain technology and digital assets. It's a bold move, especially considering all the regulatory climate in the U.S., where federal authorities are grappling with the fallout from collapses at FTX, Terraform Labs, and others. Lawmakers are working on bills to regulate crypto, which are set to be debated and voted upon this week. But Wyoming is not alone in its pursuit of state-backed digital currencies. Back in April, Texas lawmakers proposed a similar initiative, suggesting the creation of a state-based digital currency backed by gold. Wyoming's approach is unique in its focus on creating a stablecoin pegged to the US dollar, a move that could potentially offer more stability and less volatility than a gold-backed digital currency. In my view, Wyoming's move to establish its own stablecoin is a significant development in the crypto space. It's a clear sign of the growing acceptance and adoption of digital assets at the state level. It also underscores the potential of blockchain technology to revolutionize our financial systems. However, it's important to remember that this is a complex and rapidly evolving field with significant regulatory challenges. As always, it's crucial to stay informed and approach these developments with a critical eye. Folks, if you haven't done so already, please consider subscribing to our channel. Your support keeps me delivering the latest news and analysis in the crypto space. In a significant development in the Middle East, the crypto firm Rain has been granted permission to operate as a virtual asset brokerage and custody service provider by Abu Dhabi's financial regulator. Let's take a look. In the UAE, Rain has been granted permission to operate as a virtual asset brokerage and custody service provider by Abu Dhabi's financial regulator. This approval allows Rain to offer both institutional and retail clients in the UAE the ability to buy, sell, and store virtual assets. Moreover, users of the platform will be able to convert their assets to and from the UAE dirham. Rain's achievement is the culmination of a 5-year effort, as the company was one of the first exchanges to acquire about licensure back in 2018 when the Abu Dhabi global market released its virtual asset framework. This license means Rain's Abu Dhabi-based unit can offer institutional clients and some retail clients in the UAE the ability to buy, store, and sell virtual assets. This move is a significant milestone in the UAE's journey to become a hub for digital assets. Abu Dhabi in particular is considered a crypto hub thanks to its clear regulations. Rain, which is backed by crypto exchange Coinbase, has been persistent in its efforts despite facing challenges such as laying off dozens of employees last year due to the crypto winter. Rain's success in obtaining this license is a testament to the company's resilience and commitment to its vision. The firm raised $110 million last year in a Series B funding round that valued the firm at $500 million. With this license, Rain is now poised to attract institutional clients and will also be able to open a bank account in the UAE, enabling clients to fund their own accounts. This development is a significant win for the crypto community, especially for those who value financial freedom and decentralization. It's a clear demonstration that despite the skepticism and resistance from both traditional financial institutions and governments, the crypto industry continues to make strides in establishing its legitimacy and relevance. It's a direct rebuke of central banks and a victory for the advocates of financial freedom and privacy. It's the kind of progress that makes the future of crypto in the Middle East and globally look very promising. Before we dive into our next story, I want to take a minute to remind you all to share our channel with your friends and colleagues. Help us spread the word about the importance of staying informed in the crypto space. Now, let's move on to the European Union. The European Banking Authority, or EBA, has recently circulated draft rules that could significantly impact stablecoin issuers. Let's break it down. The European Banking Authority recently circulated draft rules that could significantly impact stablecoin issuers. If these issuers have a substantial amount of derivatives or covered bonds in their reserves, they could be facing additional regulations. Under the new laws known as the Markets in Crypto Assets Regulation, or MiCA, any stablecoin that is deemed to be overly connected to the financial system could face extra capital requirements and centralized supervision by the EU. The EBA has expressed concerns that financial distress at one asset reference token or e-money token issuer could increase the likelihood of distress at other issuers of crypto assets or at other financial institutions. This is due to the network of contractual obligations in which issuers operate. Now, let's analyze this for a bit. The EBA's draft rules suggest that in order to address increased risk from significant asset reference tokens or e-money tokens, the issuers of those tokens must comply with additional obligations. Their supervision could be partially or fully assigned to the EBA. The EBA has set out a set of tentative indicators such as share of assets held in the reserve issued by other regulated financial institutions other than deposits and the market share of cross-border payments. Under MiCA, stablecoins deemed significant will be supervised by the EBA rather than national regulators. They must carry out extra stress tests and must have their own funds equal to 3% of their reserve rather than the usual 2%. MiCA's stablecoin provisions are set to take effect in June 2024. Now, let's talk about what this means for our community. This is yet another example of central authorities trying to exert control over the decentralized world of crypto. Make no mistake, regulations are necessary to prevent fraud and to protect consumers. However, there is a fine line between regulation and stifling innovation. The EBA's draft rules could potentially hinder the growth of stablecoin issuers and limit the potential of cryptocurrencies. But remember, we're in this for the long haul. The road to financial freedom and privacy isn't always smooth, but it is a journey worth taking. And before we move on to our final segment of the night, a quick reminder to hit the like button if you're enjoying our content. Your support keeps us going. In the world of finance, the conversation around stablecoins is heating up. This is our third story about stablecoins just tonight. Timothy Massad is the former chairman of the United States Commodity Futures Trading Commission. He recently spoke out on this topic. Let's dive into what he had to say. As we've discussed, stablecoins are becoming a topic of intense interest. Timothy Massad sees stablecoins as a bridge between the crypto world and the real world. The former chairman of the CFTC is urging governments not to dismiss stablecoins as a passing fad. Massad's concern is that regulators are not properly addressing the risks of stablecoins. Instead, they're being sidelined due to the notion that they don't work. He's sympathetic to those in government who are skeptical about the use cases for stablecoins, but he believes that it sometimes takes time to discover the real-world value of new technologies. Massad has been a vocal advocate for crypto regulation and for more cohesive collaboration between the CFTC and the U.S. Securities Exchange Commission when it comes to digital assets. And he is not alone in this view. The U.S. Government Accountability Office is a national congressional watchdog agency. They recently released a report on the use of blockchain in finance. This report echoed the sentiment for interagency cooperation on crypto regulations. Mossad sees potential in stablecoins. He believes they could create faster payment mechanisms in the US, and if the US were to develop a stablecoin, it could lead to other countries doing the same thing. He said, quote, "I think the competition from stablecoins could be useful, again, if we address the risks, and they are significant." In addition to faster payment systems, he argued that stablecoins are already causing banks to consider their operating systems and how they can be improved. Mossad had previously criticized the US for not creating a central bank digital currency fast enough. These comments come as regulators in the US continue to mull over regulations for the crypto industry, which includes multiple bills that would affect stablecoin issuance and usage. So, what happened? In Russia, Putin has signed the digital ruble bill into law, launching a new central bank digital currency that could potentially be a tool against Western sanctions and a way for the government to control how private citizens spend their money. In the UK, Worldcoin, a project led by OpenAI CEO Sam Altman, is under scrutiny by the Information Commission's Office for its data processing practices, highlighting the increasing regulatory scrutiny that crypto projects are facing, especially those involving personal data. In the US, Wyoming is taking a significant step towards launching its own digital currency, demonstrating a growing acceptance and adoption of digital assets at the state level, but also presenting significant regulatory challenges. The crypto firm Rain has been granted a license to operate as a virtual asset brokerage and custody service provider by Abu Dhabi's financial regulator, marking a significant milestone in the UAE's journey to becoming a hub for digital assets. In Europe, the European Banking Authority circulated draft rules that could heavily impact stablecoin issuers, suggesting increased capital requirements and centralized supervision by the EU for those deemed to be overly connected to the financial system. And finally, Timothy Mossad, the former chairman of the U.S. Commodity Futures Trading Commission, spoke out about stablecoins, urging governments not to dismiss them as a passing fad and seeing them as a potential bridge between the crypto world and the real one. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.